welcome to the Daily Insights That Matter. We begin today's DITM by talking about the Fed's decision to hike interest rates by 75 basis points again as it sees more increases ahead in their resolve to cool inflation. Now, despite the risk that surging borrowing costs could tip the US into a recession, the Federal Reserve officials raised the interest rates by 75 basis points for the third consecutive time. This takes the benchmark federal funds rate to a range of 3 to 3.25%. While the current rates are at the highest levels since before the 2008 financial crisis and up from near zero at the start of this year, they are forecasted to reach 4.6% in 2023. Now, while inflation peaked at 9.1% in June, it failed to cool down as quickly in recent months as the Fed officials would have hoped. Now, in August, it was still at 8.3%, which is way above the Fed's target of 2%. Going forward, the officials expect the benchmark rate to rise to 4.4% by the year end and 4.6% during 2023, as per the quarterly projections published alongside the statement. Now, this indicates that a fourth straight quarter of 75 basis points hikes could be on the table for the next gathering in November. Now, the projections clearly outline the Fed's resolve to bring the inflation under control despite the risk that high borrowing costs could tip the US into a recession. Now, while the job growth has remained robust with the current unemployment rate at 3.7%, the officials believe that these levels are not sustainable in the long term and have projected the unemployment rising to 4.4% by the end of the next year and the same at the end of 2024. While most traders expected rates to reach 4.5% in early 2023 before falling about 50 basis points by the end of the next year, the revised projections showed that the rates would remain around the 4.4 to 4.6% levels in 2023 and may start stepping down to 3.9% only in 2024. While it's no secret that the FIIs have been net sellers in the Indian markets for a large part of this calendar year, the FIIs had turned net buyers of Indian equities in the month of July and August 2022. Now, with the Fed increasing interest rates again and keeping a hawkish stance, the foreign investors will tend to pull their money from the emerging markets like India back to the US for safer and more secure returns. This will further have an impact on the rupee depreciation stemming from outflows of funds from the Indian equity markets. The rupee depreciation would again lead to a higher imported inflation for India. However, we would want you to remember that the macroeconomic fundamentals of India are improving, and up until now, with robust institutional and retail participation, which has well moderated the effects of the US rate increases. RBI Governor Shri Shaktikanta Das Ji introduced 3 new initiatives in digital payment space at the Global Fintech Fest 2022 yesterday. While these initiatives were announced earlier by the RBI during previous monetary policies, a demo of the 3 initiatives was showcased for the first time at this launch. The UPI Lite is to be integrated on the Beam app and has been launched to allow faster, low-value transactions with an upper limit of Rs 200 in a near offline mode. Account holders of Kotak Mahindra Bank, HDFC Bank, Canara Bank, Indian Bank, Punjab National Bank, Union Bank of India, Utkarsh Small Finance Bank and SBI will be able to use UPI Lite. The UPI-linked RuPay credit cards will also be operational on the UPI platform for the first time. PNB customers along with Union Bank of India and the Indian Bank customers will get the first use of the scheme. Bharat Bill Pay cross-border bill payments has been launched to smoothen the process of paying bills for Indian residents abroad with houses in their country. Now, the Federal Bank with UAE's Lulu Exchange will be the first to go live with the Bharat Bill Pay cross-border bill payments. While UPI Lite will lessen the burden on the core banking system, the level of adoption remains to be seen as this is an incremental investment over and above the already existing UPI and UPI 123 platforms. While credit card spending in India rose to 87,647 crores last month across both the e-commerce and the point-of-sale segments, the launch of the UPI-linked RuPay credit cards is expected to expand the market for credit by almost 5 times going forward. And with more than 30 million Indians staying abroad, India is one of the top 5 biggest recipients of inward remittances. The facility will enable non-resident Indians to undertake utility, water and telephone related bill payments on behalf of their families in India. So what does all of this news mean for you? The rising US Fed rates with a very hawkish outlook for the future will prompt the FIIs to pull out of the Indian markets, impacting the rupee and our import bill. This will have an indirect negative impact and a direct negative impact on you, at least in the near future. But we believe that the impact will be moderate from an Indian equity standpoint. The launch of additional payment initiatives would lead to a further increase in online transactions and help boost the digital initiative. This will have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.